Hello, good morning. Um, I've been trying to make some sentence right now to understand how I can be able to be sharing my screen when I'm doing a live session in the ICT server bullet session. Um, Pretty much on Friday, I wanted on Friday I wanted to share a lot of things live, but which I couldn't. Um, so I decided, okay, I can just be I can just be recording it, but recording it without my voice is kind of it's kind of somehow indefinite, and I have hard time trying to type because I make some mistakes on the typing. I make some typing errors because I am trying to make a decision so fast in the market. But nevertheless, I just tried to use the tool which is for YouTube, and I believe it will give me a very clean condition to be able to record my videos and also stream during the session. So pretty much I wanted to show for today. I think I wanted to show um the event that happened on Friday, which we had a trade on USD on the morning session. Unfortunately, during that session, like I said, we 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 didn't have much trading condition, but seeing that there's a possibility of the market to stop us out, so I decided, okay, I should leave it till around the New York session. So the New York session, the New York session, um, I normally the ICT room starts from 16. That is from if we are on the time frame of +1 GMT or +1 UTC. The time to filter out um, the movement to see your silver bullets is from 4 p.m. to 5 p.m. That is on the +1 GMT. But on my own type of strategy that I need for myself, I had to be filtering out from 3:30, not from 16, but from 3:30 to see the real view of the environment. So for today, I'm going to show the type of trade that we did. Yes, and that is the type of trade that we did on Friday and what occurred and the decision that we made that made us to make a loss. Secondly, um, what precautions did we take in order to understand what the market is doing at that moment? Because the market has some type of conditions. It is doing the right thing, and you, in the other case, is doing the wrong thing. You understand? The market is always right, but you don't believe it until after you've made a loss on the market before you know that, yeah, the market is always right. Given what you need to see, but you didn't study it well. And yesterday, on Friday, like I said, since we saw the price closing below the FVG, we identified that that is the first FVG, that is fair value gap that we saw. It was from this outside fair value gap. This is the first fair value gap that we identified outside. So what I did is that I quickly entered the trade, which was I would say, which is inappropriate for me to do, even though my entry price was around 0.7217. I didn't see this fair value gap of this bearish. And if you can see on the next trade that we did, the year and the US 500, that is S&P, you will see that it gave a similar uh, trend which occurred in the market, and gave a view that I had to make a trade-off sell. So in this case, I saw this fair value gap and did identify this second fair value gap, which in this case the market had to stop me out, and I left. And immediately, when I saw that the market is going to take me out, I closed at the half, because each trade that I used to make per day, I used to reach only 1% of my account. I'm trading a prop account, and like I said, I am almost 7 years trading in this industry, and I didn't have much time to focus on my trading because of school. I didn't have much time to study in school, and then to balance reading and also school. So I had to be serious at some point, because I was almost graduating. But in the first years of my trading, learning trading, I was serious with my school studies, and at the end of the day, I had to refocus, because I might end up not graduating. So I continue to focus more on my academics, and I have not been profitable. I know it's quite sad to say that we've been trading for the past 6 years, but we've not been profitable. There are a lot of people who encountered this on their journey as a traders. Like ICT said that we didn't get to start making money in the market until we spent over 6 years in the market. And for me, each year, I used to expect that, yes, this is my year, and I end up in disappointment. and it is loss after loss after loss after loss, which in that case I gradually started pulling out from trading because I was depressed and tired, and I needed a job. I needed a job just to support my trading. At some point, if I don't have any money and I don't have any job, because I will always just stick to demo accounts. I do not have the capability to purchase a prop account or deposit in a broker. But when I started having few jobs, that is online jobs, sometimes working for a prop farm, that is always what I've been going through. But in that case, at some point, the prop farms always close down along the way. Sometimes you experience layoffs and you are back to square one again. You have responsibilities at home, which you are trying to take care of, and without that job, honestly, your trading is not going to move the way you expected it to be. If you are from Silver Spoon, you might get the opportunity for your parents to be helping and that way. And unfortunately, me, I didn't come from a Silver Spoon family, but I've been trying and trying for myself just to see that I reach the success I want to reach. So as I say, this is the first FBG that I spotted, which in that case is the signal to place the buy, because I always expected that okay, the first I see, I should expect it to be the first FBG that I see, either from the outside or from the inside the from inside the kill zone or outside any fair value gap outside. Then you can enter trade. You can wait inside the fair value gap and look for the first fair value gap you spotted. Let me remove this. If let's say this market trend going bullish and you didn't get the opportunity to see a fair value gap outside, well, I have to mark out my silver bullet session from, that is if I'm on the UTC plus one. I have to mark out from 3:30 p.m. to 5 p.m. in the evening. That is for the New York session. And if you are using the time zone of New York, I believe it is from the 10 a.m. to 11 a.m. But usually I used to mark out from 9:30 a.m. New York to a.m. New York. That is if you are using the time frame of the New York. But I'm using the plus UTC one, that is plus one GMT. And if you are, let's say for example, you are on the UTC, that is the London time zone, you can say okay, you can mark out from 8:30, or let's say from 9 to 10 a.m. Some people have a hard time spotting out the silver bullet session related to their own time zone, so they have to be using the ICT normal time frame to spot out the areas to make to filter out their session, that is the session of the silver bullet. Secondly, I can say this is another tool that I use to filter out my Asian session, my London session, and my New York session. I'm using this tool, that is indicator, has given me a very quiet easy approach in the market. And you can, as you can see, you can edit it. This is the name of the indicator, and you can use it to filter it out according to your own time zone, so that you can have ease understanding where the Asian session is, where the London session is, and where the New York session is. So from the Friday trade that we made, when I saw this first fair value gap, I immediately waited until it was 16, that is, it was 4 p.m. in the evening from my own time frame, and I clicked buy from the market. And the market started going above, and it came and it started going lower. So for each, you should know, for each fair value gap that you spot in the market, you should always make sure that the loss, you should not always put your stop loss to be very tight. If you've seen fair value gap, then you decide to put your fair value gap to put your stop loss to be very tight. The markets might end up going into that zone and to stop you out and keep going. But in this case, my normal stop loss that I used to set is at 10 pips each time, and my take profit is always 20 pips. Like ICT said, he said that always and always, if a fair value gap presents itself, you should know that when it respects it, it will always deliver 15 to 20 pips. The maximum it can produce is 30 pips, but on average, you should always set your take profit to 20 pips. I hope that is understood. And this is what I have followed every day. Each time that I want to place a trade, I risk more than 1% of my account. When the market presents fair value gap in these time zones, I place my trade. I set my stop loss at 10 pips. I set my 20 pips as my take profit, and I leave the trade. Sometimes monitoring a trade makes you to make wrong or bad decisions in the market. So in that case, majority of the time I used to place a trade and just go ahead and do my activities. And since it is just 1 hour in between, or I see if my trade has gone right or gone wrong. Filtering out this